Hey, Dan Passarelli here. Well, we had a day pretty much like we here at Marketing are expected, right? This is everything we talked about. Kind of a non-event today. The only relevance is that it closed under the 200-day moving average. I'm talking about SPY here, closing at 662.63. And VIX down just over a point to 2366. We're all waiting for tomorrow, the big day with the big numbers, the big important stuff. And that could really set the tone, probably sending us back above the 50-day moving average or continuing the route below it. We talked about those things yesterday. Now, a couple of things that I find interesting to talk about here today. One of them is gold. And I just like to use the GLD ETF as a proxy. Gold's been interesting. Gold's been interesting this whole year. This is a one-year chart. My, oh my, look at that. What a massive run up from about 242 or so, above 400. It's had this little bit of a pullback with some lower lows, but also higher highs. We're forming a nice little triangle here. And when we get triangles, which is basically a diagonally downward sloping resistance, diagonally upward sloping support that comes to a point, we tend to get a breakout as that tightening happens. And it breaks out one way or the other and then tends to have some follow through. For my money, the follow through is on the upside. And that's because we still see the People's Bank of China, which is their central bank, continuing buying the crap out of gold. 74 million ounces a month. We're talking about a rate something like that. Russia, and they're a little bit more opaque, if you will, in how much they're buying, but they said that they've increased their purchasing. Poland's buying, India's buying. And when you have just all that fundamental buying by central banks, I mean, first of all, it's weird. Why are they buying, right? Second of all, supply and demand is what moves markets. And there's a lot of demand and there's basically a fixed supply. You want to be a nerd about it, which I highly encourage. You go and you do the math on how much is being mined per year and measure out supply and demand, and you should be able to do a pretty good job making some predictions with all those numbers. Now, all that being said, I've got another thing to look at here. A stock that I find pretty interesting is Adobe. Now, we've had a little bit of some nerves going on in AI. Is it going to be the next big thing? And whether that answer is yes or no, right now, is AI overpriced? Now, Adobe, we don't think of as an AI company, but some of their products do indeed use it. And they just completed a $1.9 billion cash purchase of a little company that does SEO, basically does branding. So SEO and GEO, generative engine optimization. So that's helping, apparently being noticed with AI. That is what at least some journalists credited for on the stock being down. I find it a little weird that would be looked at as a negative. That capital expenditure of $1.9 billion seems like a pretty smart move for what they're doing, but hey, what do I know, right? If you want to get into a very, very established company that is increasingly using AI, this one has a lower PE ratio. It's just a little bit below 20 for the trailing 12 months PE ratio. High book value, but And their current ratio, which is basically a measure of their liquidity, is fine. Especially for a tech company like this. So, I mean, I don't know. I find it a little bit puzzling that they're down so low. If we want to go out to a 3-year chart, we're sitting at some solid weekly candle support right here. So I don't know. This is one that I'm personally watching. I don't make recommendations in these videos by any stretch of the imagination, but I do find it pretty interesting from a buy thesis perspective. I hope that helps. This is Dan Passarelli, Trade Smart.